Good afternoon, June the 2nd, 2016. Time to wrap up today's trading in our various markets. We came into the E-mini today thinking we'd have a trading range day because of tomorrow's non-farm payroll numbers. That tends to freeze the action. Had some help from some crude. With crude, got hurt a little bit by crude too, depending parts. So we entered the market as sellers first because of this. And the mean green trade was the first trade that popped up. Or your monkey trade. That gave you a small winner. This B ever so slowly. That B ever so slowly gave you trading profits. This S was a loser. This B, again, small profits. This S, a loser. And this B. So the trade was from the long side from early on. The only short trades that set up and worked out well for us or early in before the day session opened or right after the day session opened. The news really didn't support this rally, but it doesn't require news to rally the market anymore. It's just the knowledge that the Fed's not going to let the market break buy every dip. Looking at the F1 screen, higher low, higher high. I don't see any reason not to retest 2103, 2105. Then down to tomorrow's non-farm payroll numbers. On the F2 screen, I did an H split. We'll just leave that. But we had a P behind us. We tested the value area low. It held. Now we're testing 2100. When we broke out of the 9650 area, the next stop was 98 to 2100, and that's held up reasonably well. But I don't see any reason not to go for stops above 2105 or retest that level anyway tomorrow. Okay, non-farm payrolls plus 158, unemployment 4.9. Everybody's fully employed, ha. Private non-farm payrolls 150, compensation plus 0.2. That's usually the default number, 34.5 for work week. Then we have trade balance minus 41. No one will pay any attention to that. PMI services at 52.8, probably a little more accurate than I think the ISM services number is or will be. ISM services, which everybody will pay attention to, 55.5. Factory orders 2%. That's not 0.2, plus 2%. Get pretty wide swings because of defense, capital goods, airlines in that one. Durable orders, factory orders can have big swings. So the focus will be non-farm payrolls. One, they hit simultaneously. Unemployment, that can give you the whipsaw. Those two numbers are counter what the call was. Trade balance, nobody paying any attention to. ISM services will be 3. And factory orders will be 4. And then the key thing is failure to take out 2105. So resistance is 2103, 2105. So we're sellers at 2 to 4. Sell 1. 9 to 11. Sell 2. I think we're going to take out 2135 before this is over. Just doesn't pay you to be on the short side of the market. 96, 94 for buy 1. And then 91 to 89 for buy 2. So support's 90 to 95 and resistance is 2102 to 2105 to get started. But it is a newsday trade, and to get paid for risk and for the volatility that's there, you have to position before the news hits. and that carries extra risk. And if you're taking 1 to 3 points out on all your day trades, you really don't want to put yourself in a situation to lose 10 to 15. Know the news, you have the trade. 400 people will know it this afternoon. All in the U.S. government. They wouldn't sell that information, would they? Nah, no way. No way. Okay, the treasuries are betting that the number is going to come in lower than forecast. Some forecasters are saying the Verizon strike will mean the number will come in that 130 area, and that would rally treasuries. They're acting that way. We are at resistance, 130. If we can't take out and hold 130, we want to be short. And again, you have to take the trade before the news hits the market if you want to take full advantage of that extra volatility. Very, very strong B. Resistance is 130. That's where we are. So based on what we have right here, 31 to 03, sell 1. 7 to 11, sell 2. On the buy side, the breakout came in the 24 area, so might take a 28 to get in. So let's put 28, 24, buy 1. I think we'll probably see some profit taking before tomorrow's news. 17 to 21, buy 2. Okay, resistance, probably a little profit taking overnight. So resistance is 28 to the buck. 3 to 7, sell 1, especially in London. And 15 to 19, sell 2. On the buy side, we had the breakout from 20, so 16 to 20 is 1. 9 to 13, buy 1. 29 to 01, buy 2. Gold. Have a big unemployment number come in above 160. Gold should sell. Comes in at where some people are guessing at 130. It should rally. Nice to know that gold can sell so we can get the extra volatility. That really helps the trading. And the correct split would be, there we have it. We had an inside day trading range off the F1 screen. Definitely a B on the F2. So 9 to 11 for London, buy 1. The buck to 02, buy 2. On the sell side, 15 to 17. 20 to 22, sell 2. What's crude going to do? You would think after today's news and the rest of it that we'd be lower from OPEC standpoint. Then you look at the EI inventories, which were the opposite of the API inventories. Showed draws across the board. I think the biggest thing that's holding the market up right now is U.S. production's down about 8.8 million barrels a day from 9.6. And that is significant. It's about a 9% drop. And everybody's kind of counting on that stopping the selling. Saudi Arabia's impact on this to drive out U.S. producers. is working. And again, the problem that you have when you go to produce crude oil around the globe is that the production costs, the lifting costs, are the lowest in the Middle East. When you look at the porosity of those soils over there, you're talking about looking at river stones as opposed to fine sand and real fine gravel like you find in the United States. There's just holes and holes and holes in that structure, and that's why they have such low lifting costs. Put transportation costs on top of that, it adds to the cost of, they still have the lowest lifting costs in the world. Higher low, higher high, F1 says the market can trade higher. Crude oil, definitely a P. So are we going to get through 49.50 or not? My guess is no. So 49.20 quarter, 49.50 sell 1, 49.75.50 sell 2. On the buy side, the breakout came from 48.50, so 48 quarter, 48.50 buy 1. Pretty much the numbers we had this morning, 48, 47.75 buy 2. I think the easiest trade to see here is failure to take out and hold $50. Okay, Goldman said 105 for 2016 for the euro dollar, and Goldman, at least on their published trade recommendations for commodities and futures, has a less than sterling track record. Higher low, higher high on the F1 screen for the euro. And on the F2 screen, kind of all over the map, but definitely a B finished week. So 111.25 buy 1, 111 even buy 2. On the sell side, 75. Some people might cover their shorts in London, take us up, then 112 even for sell 2. And that's it for June the 2nd, 2002. I will see you bright and early in the morning for a Newsday trading situation that we have at least once a month, and sometimes two when the Fed speaks their FOMC. Y'all have a great evening. Going to be in the low 80s, humidity to match here as we're burning off all that rain that we got over the last couple of weeks. See you bright and early in the morning.